and gentlemen, I think we'll make a start. It's a pleasure to welcome you here today. Just before we do start, I would just like to inform you all, it should have been on the invitations that you received, that we are recording this, and the recording will be made available on the APPG website. So just to let you know before we start that it is being recorded and available on the All Party Parliamentary Group website. So welcome to this session. It's our fourth evidence meeting, the impact on fraud. Before we go through that part of the agenda, there's a little housekeeping role we have to perform, and that is to elect Martin Docherty-Hughes as Vice Chairman of this All-Party Parliamentary Group. So I'd just like to ask the MPs and Lords in the room if they would agree. So I'll propose him. Second, Andrew. Agreed by... Right, that's done. So he's now the Vice Chairman of the All-Party Parliamentary Group. Democracy in action. If only other things were such an easy job. I'm sure you guess what I'm talking about. So today's meeting is obviously on the impact on fraud. It's the aim of the fourth APPG blockchain meeting to inform members of Parliament about developments that are taking place regarding the prevention of fraud using blockchain and to help and support them in an evidence policy making. So tonight our speakers are Adam Furgal, Director and Head of Policy at R3, Paul Worrall, Zonafide Founder and Chief Developer, and John Reynolds, CEO and Co-Founder of Blockchain Digital. They're going to make a presentation to us this afternoon. Their opening remarks will be about 2 minutes, and then they will make a main objective use case, which will be short and concise as possible, although you will get a little bit of extra time because we usually have 4 speakers, and then a concluding remark on what government should do and what is your recommendation to parliamentarians. And after that, as always, we will open that up to the floor and get the debate starting. So I will ask Adam Furgal to make the first presentation, and if you want to take from that.
Great. Well, thank you very much for having us and hosting this. Just a bit of background on R3. So we're an enterprise software company developing the Corda platform ecosystem. Really brief history of us. We started as a consortium of 80 banks, 80 partners, and 20 regulators are involved as well. That moved into a sort of multi-year collaborative effort looking at how does this blockchain technology, how does it sort of apply to financial services, but then broadly to regulated business, looking at use cases, looking at architecture, and the Corda platform was born out of that body of work. And third phase is looking at now the launch of Corda and the first production applications on the Corda blockchain platform. I run a team, our professional services team, and my team helps people build things on top of Corda, so helps develop blockchain applications for business. So moving over to the topic of fraud, there's sort of a binary question asked, does it end fraud or facilitate fraud, does blockchain technology? So I would sort of argue that it's not a binary question. Although I would struggle to build a argument that that blockchain technology can facilitate fraud, but I also wouldn't argue that it would end it. A lot of the technology is aimed at minimizing the risks of financial crime. So if you look at some of the core underlying aspects of the technology, the economic models, looking at how do you minimize or reduce double spends, how do you identify assets uniquely, how do you reduce forgery, how do you identify people, and how do you reduce fraud on these networks. That's all based upon a huge body of work in sort of computer science around cryptography, digital signatures, consensus approaches, etc., to really ensure a single version of facts between different actors on a network. Summing it up is that I can guarantee what I see is what you see. But the benefit of this, of course, and why everyone's so excited, is this allows for automation and collaboration at an industry level, not at an individual firm level. But it's just a tool. Like any piece of technology, this is just a tool. These are just tools we're talking about. So I would argue sort of neither side of either stopping or facilitating. There is a new set of tools that regulators and governments and firms and businesses will have in place with blockchain technology, where you could see some really valuable developments in space. Moving on to the question of transparency. So on a Corda network, the platform we're developing, participants are generally known and identified on that network. And the sharing of information is limited to the parties that are part of that transaction. So nothing is broadcast broadly to everyone. So by design, the Corda network minimizes the sharing and transparency of information. This was one of the really fundamental requirements of the financial services clients that we initially worked with. But if you expand that out, you look more broadly across the other clients we're starting to work with now in healthcare, in energy, in insurance, in government, keeping data sort of safe and secure, not broadly spreading every transaction to everyone, is a fundamental requirement of business and of regulation as well. You look at things like GDPR, so sharing and custody of information is fundamentally important in business scenarios, not sort of broadly broadcasting data. That, of course, also has a number of side effects, positive side effects in the technology space. So looking at performance and scaling of networks that don't share everything for everyone, they can quite significantly outscale networks that everything is shared all of the time. So on the question of transparency, you need to trust, or you need to generate a level of sort of transparent data between your trading partners who you're transacting with for a particular transaction. There'll be a level of trust around that business network you're working within. We assume it's working within an existing governance framework and an existing legal framework, not operating outside of a legal framework, because that, quite frankly, doesn't make any sense. But you verify all of the data yourself. So everyone that's part of a transaction are verifying all of the inputs, all of the business rules, all of the outputs. So you're generating sort of trust, and you're generating transparency at a transaction level for the parties in that transaction. So this is a fundamental sort of tenet upon how we designed Corda and what we see as requirements from business scenarios, but also regulatory scenarios of sort of sharing of data. Moving on to regulatory issues and sort of questions around regulation. So we believe that, broadly, fraud, sort of appropriate fraud rules are generally already in place. Nothing new is really fundamentally needed because of this technology. I'd argue, however, that this is a powerful new tool set for governments, for regulators, for institutions, for market participants. Some examples of that are some of the work we've done on some of the projects where we've worked with regulators or governments. So we did a project, some of the banks in the UK did a project with the SCA looking at transparency of mortgage reporting, where you can generate sort of more frictionless experience around mortgage reporting. And that's where the regulator is actually using the data. It's also sort of fundamentally lower operational challenge for the banks as well. So the regulator is using these technologies as a tool. We've been doing a lot of work with central banks looking at central bank digital currencies. That's certainly a few years off. It's more of a broad research topic, but there's, sort of in the business of central banking, there's a lot of very interesting applications. There's also a number of networks that are being built on Corda where regulators are involved, sort of from running a regulatory node. So a regulator would get copied on transactions at certain points of the workflow that's pre-agreed with the business network. So think of sending an email where you CC someone at a certain key event, so a regulator can be on the network and be party to the data. And those are really exciting use cases, and the regulators are really, really fundamentally interested in that because it makes their business of regulation and makes their business of governing easier, so using these technologies for themselves. And we also have been running a number of KYC trials and use cases where there's been a number of regulators involved looking at how to reduce the burden of KYC, how to empower corporates and individuals, reduce the burden of information sharing, across these networks. So some really, really interesting use cases there as well. So to sort of sum it up, a few recommendations. So I would encourage continued learning, continued policy research, continued engagement. I think we see, sort of globally and within the UK, some really thought-leading work coming out of the various government and regulatory bodies. So I'd encourage that. I would, however, recommend taking that a step further. So, policy research, sort of education, sort of innovation and experimentation is great. I would sort of challenge all of us to say, how can we take these new technologies a step further? So how can we use this technology to ease and sort of improve the business of running a government, improve the business of running a regulatory function, improve the business of your business challenges within the business. So that would be the challenge that I'd leave this group with, because there's a great set of tools here, and it's time to move past the stage of experimentation and move into a stage of delivery of business results. So thank you very much.
Thank you for that, and obviously some good examples, and that focus on trust and ensuring that we do step up to the challenge that we face if we're going to use blockchain technology for different areas, especially in government. And I was Paul Worrall, who's the founder and chief developer of Zonafide, to make his presentation.
Thank you. Okay, so I'm feeling quite humble next to R3 and Corda. So my background is about 30 years in technology, software development, mostly actually in investment banking. Up until 2014, for a number of years, I was with JP Morgan Chase, and I left to actually focus on seeing if I can resolve this problem with identity theft. So nothing really to do with financial services. We had actually experienced identity theft in our family. My community had friends, different forms of identity theft, etc. And I felt that I could find a way to resolve that. And when I started, I did not start with this thing called blockchain in mind. Okay, I started with the problem. I started with the popularity of smartphones and that everybody uses them. And I did look at cryptography, which had been around a long time, and blockchain did not invent it. Okay. So to prevent myself getting down a rabbit hole, I have sort of guided myself with some written stuff, so I'm focused for you, and hopefully this is quite straightforward to hear, and I'm able to demonstrate some important points about the blockchain and what it meant for us. So we built a product that we call a digital wallet for securing activities. So most people are familiar with digital wallets for securing cryptocurrency. So as we got into this blockchain fraternity, we adopted a similar wording for our sort of product, but for securing activities rather than currency. So we're based on the Ethereum blockchain and its smart contract technology, which is quite a popular one, and it's the second biggest one other than Bitcoin, and of course it's public. So when we're thinking about solving problems, we're always thinking about how can we do things in public that's private, in public that's safe, in public where people collaborate on ensuring that the correct behaviour is achieved. Okay, so we leverage these cryptographic digital signatures. We rely on a decentralised network to ensure only entitled parties have control over these activities. We ensure that data remains private, even though it's a public network. And we also want the parties to remain anonymous. Okay, so slightly different to in our investment banking world, where we want to have more transparency. So our main focus has actually been with registry services in UK local authorities. And I actually do want to give a shout out to Camden, Kensington and Chelsea, Enfield and Croydon, who have supported us for 3 years, and they wouldn't even probably realise they were early blockchain visionaries. Okay. So there's 2 use cases I wanted to bring to your attention, and hopefully these are clear examples of how blockchain technology enables our product to address real issues of fraud today. So the first use case, according to the Law Society, I believe last year, the fastest growing crime in the UK legal sector is something called the Friday afternoon fraud. So this is where house purchase instructions, when you're buying a property, are actually hacked or phished, and fraudsters receive the payment. Now, interestingly, the responsibility for a loss in this case falls solely on the house purchaser, which is obviously large amounts of money for ordinary people. So to resolve this problem, how we use the blockchain is that we enable the house purchaser, the solicitor and the bank to access a universally accessible cryptographic record. So that record is only usable by those that are involved. They only know who the other parties are. They're the only people that can affect any change on the record, only in prescribed ways, and of course it proves the payment instruction is valid. Okay, it can't be tampered with. And that's just achievable by using this digital wallet, which just stores this information in a clever way on the blockchain. The second use case is basically people being duped by fraudsters impersonating organisations like their bank or telephone company. And I'm sure most of us have received calls and texts and emails of this kind. So to resolve this problem, we use the blockchain to enable the genuine activity that they would like to engage their customer in to be locked, a little bit like you look for the lock on a web page to make sure you're transacting with the right website. And we use these smart contracts as activities on the blockchain to enable that to happen, okay? And we depend on that decentralized network and the universal accessibility of it for anybody to have access to the product and be able to use it. So they don't have to rely on a third party or a centralized party to benefit from that. So they're my two use cases that I wanted to tell you about. So on a matter of policy, I've got two recommendations. So first, currently, fraud prevention is a process carried out in isolation by the individuals themselves and organisations. So there's incredible amounts of costly duplication of effort and friction for everyone, because every time you encounter someone, you are going through a process of fraud prevention. Now, blockchains are ecosystems, and their benefits are only possible if they motivate people and organisations to collaborate collectively, while free to act independently and committed to a shared protocol of behaviour. Okay, this is key. This is what the blockchain is really about. So I would recommend that when you're thinking about blockchain, you do think about it as a community of interested parties that are all collectively focused on preventing fraud. Okay, their participation in the blockchain helps reduce fraud, and the more that participate, the better. So the second point I'd like to say is that for most of my career, cryptography was considered a munition and subject to controls that physically restricted what benefits you could get from the technology. There are some countries that I would be advised not to take certain books to because I would get arrested. So there is a legacy in technology, in most of the technologies that already exist, that treat cryptography very tenderly and independently. Now, the blockchain and the crypto asset industry is a global phenomenon and has proved impervious to national legislation, and I believe it will continue to do so. So I've also found that there's existing regulation in the UK that will actually be an impediment to us rolling out and using the technology. They're left over from the legacy of, this view of cryptography. So I would like to recommend that there is a process to accelerate revisions when those conflicts are found in the legislation. If we don't do that, we'll be sitting there for years waiting for very important clauses to be adapted before any business would dare get involved in this technology. So thank you.
No, thank you, Paul. I thought it was rather interesting. You used a personal example to sort of take your evolution through to using blockchain as a solution. And of course, you ended on impediments, and that's one of the things that we want to avoid, and that's why this APPG was set up. So we welcome that evidence from you. Third, I recommend that we do as much as we can to talk in Parliament about this, which is what we have set this up for and to speak on, and it is getting more of an airing. It's not just about big reports, it's about asking questions and probing those things, which will actually help people in their everyday lives if we're allowed to use this technology. Our third presenter is John Reynolds, who's the CEO and co-founder of Blockchain Digital.
Thanks, Damien, and thanks, Gosia, for inviting me to speak here. I'm really honoured to be here, so thank you. I'm going to really build on what Adam and Paul have said. So, Blockchain Digital, we're a consultancy, and we are focused on helping the UK public sector adopt blockchain technology. Our journey started doing a year of research looking at various public blockchains and private blockchains, and towards the end of that research we sort of came to the conclusion that the financial services sector were about 2 years ahead of the public sector and had kind of figured a lot of this out. So particularly for the types of use cases we were looking at, we decided to work quite closely with some financial services organisations and also actually working with our R3 for some of the sort of attributes of the network. So when I look at fraud and think about fraud, and when I share my thoughts on fraud, I'm going to do it more in the kind of B2B, business to government context. So as I was thinking about this, I looked on the ONS website, and fraud is quite an old crime. I think it was 1245 or thereabouts, I should have written it down. Then it was first put on the statute. So fraud itself actually is primarily about misrepresentation, and if you go onto the ONS website, that's what it says. And I thought, well, misrepresentation, so passing something off that you know not to be true. And when I read that, I thought, okay, well, we're onto something here, because I think if you ask anybody about blockchain, whether it's public, private, or anything else, it's about that source of truth. And as Adam said, what you see is what I see, and people having that certainty. So then you think about cybercrime and the internet, and I think there is absolutely no doubt that the internet has enabled fraud to go at a massive industrial scale, nationally and internationally, and the ability the internet has created for everybody in their own home to manipulate and change data is staggering, really. So cybercrime and fraud, the internet has enabled fraud. And when you look at cybercrime, it kind of breaks into two buckets. One bucket is around new crimes that are only enabled by the internet, and then there are old crimes or fraud that actually have been helped by the internet. So I thought about, right, well, as a use case, what would be a good one? So we work with the public sector. The biggest fraud against public purse, tax fraud. So there's kind of two things that I think blockchain can help with. There's what's called the tax gap, which is what HMRC think they should get and what they actually get, and that's about 32 billion. And then there's avoidance and evasion, comes to about another 9 billion. So there's £9 billion problem there. And if you think how will blockchain help that? Is it going to make it worse, or is it going to make it better? The internet has certainly made it worse, and I think blockchain is something that sits on top of the internet, has got huge possibilities in improving and reducing significantly the tax gap and avoidance of tax, just looking at that use case. As Paul said, blockchains are an ecosystem. They should be based on shared protocols. So if we think about imagine a network where every small business is on the network. Every small business doesn't mean they necessarily need to run a node, but they could have their cloud software provider provide them with that ability. So every time they transact, party A, party B, that becomes visible to the regulator. And it doesn't need to become visible in terms of the confidential sort of data within the transaction, but just the fact that party A and party B. And then HMRC move beyond this sort of state whereby you have to get somebody, because going back to the definition of fraud, it's where somebody can misrepresent something to you. Well, they can't misrepresent it if party A and party B are saying it happened and you know it happened at a specific point in time, and it's data that's immutable, and as we all know, it's then built into a history of transactions, so people can't go back and think, oh, we're getting investigated, we better sort our books out quick. That can't happen. I think with other technologies such as moving away from PDFs, sending tax returns in PDFs and paper and all the rest of it becomes machine readable, blockchain networks with analytics across the top digital tax on blockchain with analytics will make a significant improvement in it, in the tax gap and the tax debt. And if I sort of then build that use case into trust and transparency, when I think about trust, call it sort of, what source, what truth do you need? And you need to go back to the source of the truth. So if somebody asks you, if you ask somebody, how old are you, and they're going to say they're 18, the best way to validate that, you could ask their family, you could ask very different people, but actually if you go back to the data source, where they were born, where they were registered, the same with talking about a property. Who owns the property? The best place to go is the land registry. It is there. And as Adam said, there are now blockchains that really build that history of a transaction. So when if a business wants to know what level of transparency do I need for trust, I think the level of transparency you need for trust is source transparency. So you're going back with whatever piece of data you're looking at to the source of that data, to the trusted party of that data, and blockchains can enable this. So in terms of regulation, I think using the use case again, but sort of more broadly, government can begin to regulate to clean up some of the data, to be thinking about this source of transparency and trying to sort of adopt, as Adam said, we should be moving beyond proof of concept, beyond ideas. We're delighted we've recently won a government project to work with government and industry on this very topic. So we do feel we're moving from ideas into action, which is really good. But having the regulation that can support that. So in conclusion, I'm absolutely convinced that blockchain technology will enable the public sector and the private sector and businesses to make it significantly harder for individuals to commit fraud. Thanks.
Thank you for that, John. I think we've moved through those presentations on trust, interested parties, and transparency, and I'm not quite sure to feel scared or reassured by the fact that government's 2 years behind private enterprise on this, but we are trying to change that. So watch this space. Okay, ladies and gentlemen, what we'll do now is we'll open this up to you all with the questions and answer sessions. So who wants to kick off? Who wants to ask the first question?
My name is Christian de Waterban. I'm from Public and Projectis. We're a completely different sector of yours. We are in publishing and patents within the blockchain, family, we put it this way. Maybe it's just my ignorance. What is the relation between cyber, or rather, could cyber fraud be directed immediately on the blockchain system, on the consensus? And what sort of power would it take to actually penetrate the system?
Go below the belt straight away.
Yeah, well, I've always been like this. I'm sorry. I like to get straight to the point.
So I can just start off with
answering it. So first of all, my definition of cybercrime, it's when you've got automated, or computer automated attacks, and I think that's kind of what you're referring to,
Yeah.
right? So that's an intelligent attack. And then on the blockchain, when we're sort of being ideological about it, you know, we're talking about these protocols that all the participants in guarding the data, as it were, on the blockchain, these are all collaborating in a protocol, and if they don't collaborate in the right way, they will not be accepted by all the other elements of the blockchain. So that's kind of this whole concept, and there are different consensus mechanisms depending on the network for those nodes to arrive at what is an agreed statement of record, right? So what you're talking about is two things. One is it possible to attack that network to maybe just stop it working? Okay, so theoretically, if it's a massively distributed network, then that becomes harder to do. But of course, it sort of is possible. But I would suggest that if you look at, say, Ethereum, ignoring its scalability concerns and performance concerns, generally that has been working and proved itself for 3 years. So for a technology guy to stand there and like defend it, I've been in technology 30 years and I've spent lots of time trying to technically defend things, but the proof of the pudding matters. You know, it's out there, it's working, and people transact on it, and they pass a lot of money through it. Okay, so that would be my first. You know, sorry, the second bit I was going to say is, can they change the data? Well, so that's, can they attack it and try and change the data? And they would have to do what's called a 51% Sybil attack to be able to do that and take over the network. And again, that has rarely, if ever, sort of happened to my knowledge. It may have happened, but it certainly has recovered. The network's recovered, and the community using it has not lost confidence in it.
Right, thank you very much.
I'll give maybe a slightly different perspective, because I suspect what you're talking about is sort of, you know, network attacks where you're trying to attack like a proof of work system. So when we built Corda, that was, you know, an approach we looked at, but we ruled out quite quickly of sort of a proof of work type system where you have this sort of concept of mining. Don't want to get into the whole energy consumption debate, etc. But you know, our view is that's, you know, sort of wasteful and not necessarily required. So the way the Corda network works is each of the individuals that are involved in the transaction verify that data, have a copy of that data. It's not widely distributed amongst every participant, so there's not a single attack surface. So you couldn't attack the network holistically. So we believe that has lots of sort of positive side effects. So I think that's sort of maybe the root of your question is, could you attack a network holistically and sort of arbitrarily, could any party that's on the network arbitrarily change the network, the data on the network, and sort of what Paul was saying, a 51% attack? There certainly are cases of that, and I think that's certainly something to be aware of in these sort of public networks where you have a proof of work-based system where anyone could change the record of data. We believe sort of architecturally that's not an appropriate architecture for a lot of situations. It's a very positive architecture if you want to create a censorship-resistant digital cache or an unstoppable world computer. That's a great architecture. So the types of use cases we typically look at, and I'd probably argue that most government use cases don't necessarily need those properties.
John, do you want to come in at all before I start?
No, I think that's fine.
You, and then...
Okay.
Anton Angione, I'm independent, so I've been a blockchain enthusiast for a couple of years. I think we're missing a really important point. We're here to helping the government in understand what is the blockchain, what is the difference between a centralized and decentralized blockchain. Is it public or it is private? I think if we want to speed up the regulation, the legislation, and be the global leader post-Brexit, we need to try and articulate in very simple manner, because I suppose we haven't been in the blockchain for a long time, so we need to try and explain in very simple manners what is Corda as a blockchain, what is Ethereum, what are the differences. I personally think it is incredibly important to explain the decision makers what is the best for the British government to be potentially the global leader post-Brexit. Thank you.
Okay, thank you. Do you want to comment on?
I attempted not to start to try to define blockchain in the session, so I won't open that can of worms. But I appreciate your point.
So I could dare to if you want. Well, no, John.
I think for those who've been on this APPG journey, we've done that. So I don't think it would be a good use of our time right now to explore.
I think
the point is a good one more generally.
The wider audiences, which we are trying to broadcast to through this APPG, they're probably a continual reiteration of what it is, but what it can do. So the point's right, we're probably going to keep revisiting that on the outside to people, and on the inside in these evidence meetings, it's the uses for, the problems within the solutions that we'll provide through the witnesses, through the statements, and through the questions and answer sessions. So yes, it's important that we come back to it on a regular basis, but particularly to sell the idea of what it can do. So that's something we'll sort of put out there on the website on a regular basis, and actually get information through to parliamentarians. We'll regularly update them, and just maybe every time we do that on what we're talking about, maybe get a little bit of an introduction in everyone of what blockchain is, so that they constantly are reminded of what it is that they could be looking towards the future of regulating or not regulating, depending on what the case may be.
So is the action there to actually make a definition of that and get it on your APPG website, so there's something you refer
If
to?
I may actually answer to that, so our first evidence meeting was exactly on definitions, and we went through all of the types that are known, and our speakers sort of explained how they understand all of those differences, and all of the evidence that was given then will be put into the think piece that is to be launched in November.
Okay.
And this is something that will be then circulated around all of the parliamentarians, and we're working.
So by this definition, Corda is a blockchain.
I don't know what the definition is.
Oh, thank you.
Okay. Hi.
Ariel Wallano, I'm leading the design of a DLT-enabled business model for Lloyd's of London and the London insurance market. There is a at least perceived and possibly real trade-off between how effective a blockchain or indeed any other solution is at fighting fraud, and how much privacy is eroded, particularly to be shared with regulators. I'd like to invite the members of the panel to advise the lawmakers on how to tread the balance between their role as custodians of public safety with regards to data, and as well as guardians of an individual's right to privacy.
Yeah, it's a fantastic question and observation, and really sort of core and fundamental to the things we've been thinking about for sort of many, many years. So I guess I'd probably start at looking at more of the specifics around what the outcome, what's the use case, what are you trying to drive. But broadly, I think you end up sort of back at a few sort of fundamental principles in most business scenarios and business transactions, where sort of first of all, the parties that are doing business or doing a transaction typically want to keep that a negotiation process, and probably some of the details of that, private amongst themselves. There's sort of various sort of competitive reasons for that. There are market structure reasons, in a lot of cases regulatory reasons for that. You then extend that to thinking about individuals, thinking about citizens, thinking about privacy situations, and also sort of certain regulation in that space, as well as some of these businesses, governments, banks, insurance companies, whatever the case may be, operate under a relatively strict legal framework and regulatory framework around custodianship and how personal data is managed, how their customers' data is managed. So you have to come back to those sort of fundamental principles of the use case and then look at, what architecture is appropriate for those transactions. And when we've looked at this sort of over the years in the design of, that sort of heavily influenced the design of what we've looked at is the scenarios in some of the public networks where all data is shared with all nodes at all times to generate part of the consensus process. We believe that that architecture to be not appropriate for a lot of use cases, and I would argue sort of not appropriate for a lot of sort of privacy use cases. So you need to look at different approaches. You need to look at different architectures. The other point I'd make, and there's sort of been a lot of investment around sort of technology and sort of inner technologist in me can get quite comfortable with some of the quite advanced sort of crypto approaches for sort of sharing data or hiding data or encrypting data on these networks. Technologists in me get really comfortable with that. The person who sort of understands human behavior, I wouldn't trust humans to keep that stuff safe, sort of passing around encrypted data. So you need to be sort of really careful about that around the architecture of how this data is distributed, especially with private information, especially with information about individuals, sort of how my data is custodied via my bank or the businesses I work with or the government that I choose to share that data with, I think is a fundamental concern.
John?
Yeah, so the two specific government projects we've started and another one we're getting towards, it's not really about more data, it's about simplifying and joining up regulation and government. So for the use cases we're looking at, the business participants and the citizens as participants have to give data to multiple different departments, multiple different times. The amount of data that we actually give up is vast. So it's not really about saying give more data, it's about how can government join itself up so that there is kind of single sources that they will accept across multiple agencies, and then trying to join up the regulation and the policies and the procedures and everything behind that to make it simpler. And we believe that with distributed ledger technology, it's easier for all these sort of data islands that you have across government to be synchronized, to be joined up and to share data. Government is not going to centralize data stores. So we've been here many times where we try to have this Uber database for government. Government departments are by their nature decentralized, their cultures, their budgets, their processes and their missions are decentralized. And so therefore, we believe by having a distributed ledger glue to bring them together, they can keep that mission and keep that decentralized model, but bring it together, and the regulation will need to facilitate and enable that.
My apologies for the follow-up, but it just raises an itching question.
See the enthusiasm.
That all makes perfect sense, but I think what happens is the joining up raises questions that have never been raised before. To use an analogy, it's been generally accepted for centuries that if you are seen walking out on the street, that's a matter of public record. But now that the government has the capability through various cameras to track your movements 24/7, even though it's not a change in your legal rights, it makes people pretty uncomfortable. And I think as the government joins up, we're going to find new areas of discomfort. How would you propose, doing something about that?
That's okay. I'll pick up on that one just quickly, right? So we spoke to the law department in Birmingham University about 2 years ago because I, being from an investment banking background, really struggled with the public network concept. So the best way I can respond to that, we talked about the CCTV. And we talked about privacy and what people thought about privacy. And they actually had stats that most people say they're more comfortable and feel safer now with the CCTV rather than worrying about Big Brother. If you ask most people, they say the fact that they don't think they're ever going to do anything wrong, which we would expect them not to, so they feel safer that if someone else does something wrong, that it can be seen or recorded and they can refer to it. So I took a lot of persuading on that myself, but what we did is when we looked at use cases, we always looked for records that are public by nature, and that's why we ended up working with the registry services, because records of birth, deaths and marriages by law have to be public. There are strange habits of the government about hiding the data and trying to sell it and stuff like that, but in reality, as statutory data, it is public. So the fact that someone might store a record of their birth or something on the public blockchain, it's a public record anyway.
Any more on that point before I move on? I'll just go here and then at the back.
Steve Barr, Microsoft Central Government. I'm interested in what your views are on how we get businesses to adopt blockchain. I've got 30 years with HMRC, and obviously I started when I was 9. And I get the scenario, but you've got 200,000 businesses in the UK. What is them really? And there's 1 in 3 people around the world don't have a birth certificate, so you can't register that. So I get it why it's relevant for HMRC and all the departments and so on, cracking down on fraud. But what's in it for the businesses to put their data? Because they, small businesses, big businesses might not want to be completely honest with some of their stuff.
Yeah, so
that might not be politically correct, but reality speaks.
I'll have a first pass at that. Thanks, Steve. For me, it's about reconciliation. So, as a small business owner, and I know there are a few global accountancy firms looking at this at the moment, and they call it, invisible admin and various different things. So, the point is that if you, as a small business owner, are getting 40 emails a month or a week or whatever it is, and they're in PDFs, and you've got to take those out and load them into your account software and then send something off to HMRC, etc., etc., etc. So the world of business is done on the internet, email, largely. So I think what's in it for business is cost reduction, efficiency, reduce risk, because you know that your counterparty has got the purchase order or the invoice, and etc., etc. In terms of adoption, I used HMRC, but we're not talking to HMRC. I think it's an ongoing journey of absolute education, and selling distributed ledger technology is the most challenging thing I've done on one level, because you don't sell to a customer, you sell to a network, and that's something we're all figuring out. But I think ultimately the benefit for business and government will be efficiencies, reduced costs, and reduced risks.
Yeah. I'm just wondering if they'd be happy that government has access to all their data. We talk about the privacy and so on.
So I think it's a different it's a different thing. It's not necessarily the data itself. It's the fact that party A and B are saying, yeah, we transacted.
Yeah.
We don't necessarily know what we transacted, but that's better than me representing that I did something on a sort of PDF, and so it's taking it forward. But I think you're right.
Yes.
As a small business owner myself, I would have my year-end accounts, and presenting them on a weekly basis would be a big overhead. So I think it's got to be frictionless. It's got to be really easy, and that would be the benefit to me. If it's like fill it in and it's done, then I'd be happy with that. It would reduce my cost, reduce my risk. So I think that's the benefit.
Yeah.
Well, there's so much that I could say. So I'm going to say probably a provocative thing. So, of course, one of the things that's made blockchain so popular is the fact that people have felt that they can store value in it. So Bitcoin obviously is what has kicked this off. If you combine that then with these the consensus algorithms that encourage behavior in a certain way, a positive behavior which you can build into the protocols, and you combine that with some form of remuneration. So one way of compelling people to behave in any system is working out some remuneration. And that's what these technologies are about building
protocols that encourage a certain, filing on time or something like that.
Paying
A
less
certain
tax.
sorry.
Paying less tax.
Whatever it is, but you look for some mechanism of behaviour that then provides some form of reward. And because it's technology, that can be much more granular than just, a discount for filing early. You can make it part of the fabric of how those businesses are thinking and how their business works. And you can embed that into the protocol of the software for the blockchain.
Make it simpler for them to operate.
Would you like to add anything to that, Adam?
No, these guys nailed it.
Lady at the back.
Yeah, hi, thank you. My name is Carmen Benitez. I'm with Fetch Blockchain, and thank you all very much for bringing all of us together through the APPG. And thank you to the panelists. I think the points that you've raised so far are really important. There was a recent case study in Finland where two Finnish companies recently partnered to create essentially the first blockchain solution that enables new businesses to have a fully digital identification. And the architecture behind that actually for the first time is using both Corda as well as Hyperledger Indy. So it's bringing two blockchains together to create this type of facilitation of digital identification for new businesses. Now, the reason why this is important is because a lot of people are, entrepreneurs, and we're moving more and more into this entrepreneurial space. So having digital identification from entrepreneurs to a business is something that is important for government. My question then relates to when you see these two new blockchain platforms being used, one for the architecture and one for the verification of the digital data, who, from the government standpoint, who holds the liability? And then secondly, what about the onus of that data? Like, because they're both permission-based networks, specifically looking at Corda and Hyperledger, how do those two parties work together in that sense? I'll leave it to you, gentlemen, to advise.
Who would like to take that first?
I always say advise, but we're here to give evidence.
Please do.
Go ahead.
No, you go.
Thank you.
I could help because my company are the inventors of Hyperledger Indy.
Oh, good.
And I was directly involved in that project.
I'm glad you're here.
So my name is Andy Tobin. I work for a company called Evenym, E-V-E-R-N-Y-M. We're the creators of Hyperledger Indy, which is an open source ledger specifically for identity. And the instantiation of it is called Sovereign, S-O-V-R-I-N. We were involved in that project.
Yes.
Two banks together, plus the Finnish tax authorities and the Finnish Companies House equivalent. And they wanted to demonstrate how to create a digital company with its own identity, with all the certifications that go with it, with the directors of the company identified, and so on. And Corda was handling the financial transactions, and the Indy ledger was handling the identity transactions. And the change in the way things work is actually, it's not really a change. It's all they're trying to do is replicate what happens now with paper documentation, but at a distance. So if I need to go and prove my identity to you, I could show you a passport when we're in proximity. And this was about being able to do the same thing digitally, taking into account things like liability and where to store public information and private information or personal information. So the way the liability works is the same as the way it works today. If I show my passport to a bank, they have the liability to check it before they give me an account. It's not the issuer of the passport that has the liability, it's the bank has the liability to check. So we didn't really see many changes in the liability models whatsoever. Just because there's a blockchain or a ledger sitting in there, it doesn't actually make much difference to the way the liability works. So that particular project was a really interesting one, the first of its kind to link those things together for identity, for people and for organisations. And the last point on it is that we're talking about fraud here, and the key underpinning nature of fraud is that it's because you don't know who you're dealing with. That's kind of it. So if you can solve that problem of knowing who you're dealing with, which currently we solve with a universal standard called paper that the government issues. If you can digitise that in some way and protect and provide for regulation like the GDPR, for example, and not putting stuff on the ledger that you don't have to, then you can get a long way towards reducing fraud because people know who they are. So
actually, I'll just qualify something you said there. So actually, the institutions, as they're configured now for fraud, are concerned about first-person fraud, which is where they do know the person, but the person does something they're not entitled to. So that's
if you can mix the entitlements and I shouldn't be asking you.
Yeah.
If you can combine the entitlement with the identity, so you're proving who you are and that you're entitled to execute something. And the other thing that a ledger brings, or blockchain brings, is the removal of the middleman. So a lot of the problems we have at the moment is that there can be a middleman who can become a target for a fraudster. So an example might be an email provider becomes a target for a fraudster because they're providing a capability in the middle. If you get rid of the middlemen, which is essentially what a lot of the benefits of blockchains, then you remove that ability for somebody to get in between the two parties transacting. So if they can identify who each other are, they can then trust each other and they can transact without there being anything in the middle.
And there's one other thing I could add to address the question about liability. So I mentioned issues that are regulatory issues or in acts of Parliament. So I actually know that, I believe it's the Telecommunication Act 2000, there is a clause in there that says anybody that provides a certification of what we call a public key, or cryptographic certification, must be capitalised enough for the maximum loss of the use of that key that they've certified, which basically stops any company from being able to provide a cryptographic assurance, because you can't take liability for it. And that is one of the things that we do need to have full automation in blockchain, otherwise you'll still have people checking the passports and using that old fabric. So for software to do it, and for that kind of certification, you need to check that that clause is not an issue.
Any of the other panelists like to come in on that?
I'll just make one minor point. I think you covered it better than I possibly could, but I think the case is a great example of the power of open technologies and open platforms and innovation on top of that. So we've been sort of working together as companies sort of broadly on and off over the last year, but that specific implementation we weren't massively involved with. Some of our partners were, and some of the people building on the networks, but you can see the power of these technologies when they're open source, open networks in the community, of starting to evolve, past where the creators started them, right? So you see these open source pieces of technologies putting together, and that would sort of, I build on that from a government perspective, that the power of open networks and the power of open technology and open source frameworks is fundamental. So you start seeing innovation like this. How can I take experts in the identity space, paired with a specific government problem, right? Paired with a group of banks who may want to run a network doing something. How do I start putting these pieces together? That's truly exciting, based upon these open platforms.
Thank you. John, do you want to come in with some?
I agree with that, and I think we talk a lot about, at least we have at previous sessions, about concerns about interoperability between different technologies and between different blockchains. And I think one of the things that people should also consider when they think about blockchain technology is actually its interoperability with what exists today. And I think that's one of the big messages we have to get across, and one of the obstacles we have to get across with certain technologies if we are going to get broad adoption. So we were talking about HMRC, but any government department, if they're going to adopt blockchain technology, they're going to need to know how the data on there interoperates and interacts with the data in the rest of the world. So interoperation of blockchain is important. interoperation of blockchains with the rest of the world, I'd say more important. Yeah.
Thank you.
Very much. Just had a brief point. I think people have touched on it already, and the last couple of questions have touched on it in a big way. It's right now in fraud, we're talking very much about personal fraud, about single individual fraud, but actually the concept of the blockchain was to go beyond that and not just deal with individual fraud, but also organizational fraud, institutional fraud, like system-wide fraud. Yeah. And that's where the trade-off is. So if you truly want oversight of everything to stop system-wide fraud, then you're going to lose maybe a degree of privacy and a degree of scalability as well. So the decision we have to make is, are we going to stick with the system where we're at right now, where a few people control what truth is? So what is actually truth? Is it what's stored in a database? Is it what's stored in a government database? But in the future, is it in a database controlled by 3 or 4 people? And are they the arbiters of truth? Or are we moving towards something where everyone has kind of an equal say in establishing the truth, but not necessarily controlling the data? And that's where we have to think. And I think there's going to be a big issue of what constitutes private or personal data in the future. So the big debate right now is, I'm not going to, on the blockchain, I'm not going to send you my data. That's stupid. But I'm going to send you a hash of my data.
I was going to ask exactly, how is it stored actually?
So what you do is have your own store data, but you'd send a hash, a one-way hash, which basically means, in the system I use, it goes from a 1 gigabyte file, will go down to 48 bytes.
That's it.
So there's no way I can go back from something this small to that big.
Exactly.
So what that does is unique enough to prove that something else I show you is the right thing.
It's exactly what we're doing in public for articles for journalists right now. We're developing.
But I think there's still a debate to be had, because under EU GDPR law, and it isn't. It's
Exactly.
a bit
We
of
run into that
grey
problem.
area. Yeah, so no one really knows, and you ask a different lawyer, you get a different answer, and that's the kind of conversation we need to have. They'll probably charge you a lot of money as well. Yeah.
So some things never change.
Yeah.
So that's exactly how we store data. So we don't store data. We allow data to be exchanged through whatever means people want, but our activity will look at it and say, yes, I am related to that data, right, just by using the hash. Now, we did again speak to Birmingham University on that, and a couple of other universities, and they came back and said, from a privacy point of view, that's not considered data. So we said, okay, we believe that, and we took that as the right advice to continue using hashes.
There was, if I could just chip in again, there's recently been there is an EU working group on blockchain that's similar to this. And there was a session there recently in Brussels where they were looking at this very thing, which is what is PII in the context of a ledger and a blockchain. And they actually concluded that even hashed data is personal data. Okay. So rightly or wrongly, that's what they concluded. And I think this brings up a bigger point, which is there's been a sort of tendency to say, well, let's put it on the blockchain. So a birth certificate, although it might be a public record, putting it on a blockchain, you can't change it, you can't revoke it. You probably wouldn't revoke a birth certificate, but somebody could change sex or name or anything else, and it's always there as a record. So I think the tendency of people to say, well, let's put it on the blockchain needs to be kind of nailed as a very bad idea. Because not only from a privacy perspective, it does potentially render the people operating the nodes that make the blockchain work data controllers for that data, which is
would that include
quite a bad thing.
would that include just basic public keys as well then?
Well,
because in the same kind, if a hash is also PII, I think a public key would be PII.
Yeah, so there's a definite argument for keeping personal public keys off ledger. The way that Sovereign's architected is to have public identifiers, like for an organisation, on the ledger, and private ones off ledger. So there are thoughts at the moment that a person's public key is PII, and they therefore should be kept off ledger as well.
Wow.
So that means you need to look very closely at the depth of information that goes on ledger and actually really not have very much on it.
The other alternative approach to challenge the fact that I think they're confusing encryption with hashes. So encryption, yes, I can work backwards and get it, but in a hash, it's a one-way function. You can never work back.
Yeah.
And just because it's been arbitrarily made that decision's been made at a higher level, that's kind of what we should be doing, is saying, building the evidence base to say, actually, maybe that was the wrong decision.
Yeah. Oh, I think there's, no one's challenged that in court with the GDPR lawyers in their helicopters coming down.
But that's still going back to individuals, isn't it? Because the likes of HMRC DUP store PII data without me knowing it, and we'll have it in 30 different systems, and they could put it on a blockchain without me knowing it. And that's all my birth date, my national insurance number.
Yeah. But then when you ask them to delete it, then they've got a problem.
Well,
right?
if
At
it's
that
on
point,
blockchain, they won't be able to delete it, will they? That's the problem.
Yeah, exactly.
So that's why I think we'll have to, be established so that we know the protocols around what we're going to do if that's going to happen. And that's, again, I go back to why we set these evidence sessions up, so that when we're making those decisions that we are better informed in what to do. I wouldn't say fully informed, better informed. Just go to the gentleman there.
Piers Kazimir Rofchinsky. I thought there was a really important point that you made about education, and it's been mentioned again, because I do think within this room, I'm sure we all generally know blockchain and the underlying technologies, and we've heard about hashing, which I think certainly has its place, and private and public keys. So we can define the problem and we can ask the questions, but what about people on the street, the small businesses, the organisations who I think need help and could battle fraud if they knew about these technologies or knew the questions to ask? And I think there's a real sort of issue and opportunity. So I think it was brilliant that you mentioned education, and it's come up once or twice, but how can that be sort of taken out much more broadly? I think it's a really important thing to think about.
Yeah, I mean, I'd echo that. It's difficult, right? These technologies are changing very fast. We could argue for the next 2 hours or day about what a blockchain is, but I'll try not to. And what these tools are in plain language to whether it's financial services, whether it's government, whether it's each other, and having that baseline of education, I think would be exceptionally valuable. It's very hard to keep that up to date. I mean, we have a education department. We do our own training. We roll this out a lot, and it's exceptionally hard to keep up to date. Both, sort of developer training, business level training, just talking about, what's the scope of the opportunity. These things do change quite a bit. But I think it'd be a very interesting, challenge to set yourselves at the APPG to see, what would a baseline look like? How do we communicate, in simple and plain language that sort of humans can understand, not a bunch of blockchain nerds, to how these technologies can be used, the pros, the cons, the benefits, the risks, etc.
Would anyone else like to come in?
Well, there are digital skills platforms like the Duke of York's IDEA, perhaps you've heard about it. And there is now, since a few days, a badge on blockchain. I was consulted on this one. And then it was not easy to explain to teenagers and those using the digital platform what blockchain was about. And that's one way about education. The badges are distributed across the country now in various councils and schools. And it actually helped just being familiar with these new technologies. So that's one way.
The Open University also has a really, really interesting prototype around blockchain certification of academic records that they want to put forward and have more broadly adopted. It's also worth looking at.
I think the point I'd like to make about core education, the main thing that ordinary people would have to understand is this public-private key concept. Now, one of the problems is every time someone tries to describe it or put it into a piece of software to help the user, they actually provide a different experience for the user. So they never really understand fundamentally, it's just these two keys and one comes from the other, etc. So one of the problems you've got with education is accidentally obfuscating the reality, right? So I think the education isn't quite, blockchain's a different thing, but the education on for those systems that have self-sovereign control of their keys. The education there is to agree to just explain it one way, which is as close to the main way it worked as possible, which actually, when you get down to it, can be straightforward, explained straightforward. If you try and invent other ways to explain it, some pedagogy around it, I think that's where they just get confused. I've tried it. It's much better to just say it plainly.
Yeah, I think there's two things on education I'd like to sort of contribute. One is, in terms of the technology itself, if a business is using it and they don't know it's a blockchain, and then that's superb. But in terms of the digital skills, the digital economy, there really is a huge opportunity here. We're going to be announcing soon, in collaboration with one of the government departments, a sort of innovation community, because as government begins to start these projects, we've said they're ecosystem projects, so you need to be collaborating with the private sector and with the other participants in that network. And as part of that, all of the products, most of the products are open source, so they're freely available to universities, to startups, etc. So I think developing in the open as government, sharing code, inviting startups, inviting students, inviting universities to collaborate. There's lots of open collaboration channels. That's what we're going to be doing, and I think government needs to make sure that they're developing these systems in the open and allowing startups and universities, etc., to participate.
Just a gentleman on the end there.
Hi.
Yeah, you, and then yeah.
Okay. This is Junaid. I'm one of the co-founders of a blockchain startup called CapEx Move. Previously, I was working for a company called EY, Ernst & Young, mostly with their fraud investigation department in different countries. So from my perspective, how we can benefit from blockchain technology when it comes to fraud is that there are different things. First of all, if we think the life cycle of the fraud, first of all, fraud, when we are talking about fraud, we are mostly talking about a past event, because we cannot talk about a future event. It means that you need to accuse someone that they haven't done yet. So when it comes to fraud, we can define it or classify it into two: known fraud and unknown fraud. Known fraud is the fraud you identified, and unknown fraud is the fraud, what I call is a successful fraud event. So to identify fraud, you need something called an audit trail. And successful fraudsters are good at manipulating audit trails. And blockchain is useful because it's immutable by its nature, and it's traceable, so you cannot delete it. It's there. It can be private or public, but it's being held by some entities. So the second thing is, after you identify fraud, is the enforcement part, which can be called asset recovery. There are different initiatives. For example, the World Bank has something called STAR, Stolen Asset Recovery Initiative, and there are other initiatives as well. The problem with those initiatives and any initiative around tax justice or corruption is that countries are not good at communicating with, among each other, and they are not very good at information sharing, although institutions like OECD is working on that heavily. So blockchain is useful because it stands as the single source of truth. You have one ledger you need to refer to. So if you want to trace the truth or trace some evidence, there's only one source you need to go. You don't have to do consultations, communicate with different jurisdictions and enforcement agencies. That's why fraudsters and corrupt people move their money from jurisdiction to jurisdiction, because they know that if they move to other country and then other country, it becomes almost impossible for the originating country to trace that corrupt activity. That's all.
Would any of you like to comment on that?
I mean, I agree, and sort of looking at cybercrime, there are 4 Ps, and I can't remember them, but there's as you say, there's prevention, and then there's proof. And I think if you're a fraudster and you know that it's going to be very difficult because there's only one source of the truth, it's going to prevent it and deter it, so that's for sure. And then, yeah, absolutely, in terms of proof, you have the audit trail, and as we sort of the example earlier on, you can't doctor the documents, you know, when the inspection occurs, because you know you've got that. So absolutely, I think both prevention and proof and detection will be helped.
I can add, again, lots of things come to mind, but a key one comes to mind with Interpol. So I know Interpol, I saw a guy talking about what they're doing there, and actually the fact that the public blockchains are so accessible, they've built a number of products and services that are complemented by, you know, AI and knowledge regional knowledge bases, so they can actually now track transactions and associate them with other data that they've got, which are known criminals or known difficulty areas. And I think they're trying to develop that as a service to rent it out to countries as well. So you can see there that they've caught that very early on, and they're building a whole practice based on a public blockchain. That would be a bit more difficult if it was a private consortium blockchain.
There are a number of services like that that are analysing blockchain data, analysing core transactions, that sort of thing.
Gentleman at the back.
Thank you. I'm Narayan. I'm with the Association of Chartered Certified Accountants. Our members are not technologists, so they're finance and accounting professionals. We've got about 100,000 of them in the UK, another 100,000 in about 100 countries globally. The reason I'm interested in this is the education aspect, because what we're finding with a lot of our members is if a company wants to, say, procure a blockchain solution, often the question is landing at the table of the CFO, who needs to have a point of view on it, and we as an educational body, for a lot of these people, are trying to figure out how best that piece needs to work for them from an educational point of view. We did an event, incidentally, earlier this year with R3 actually, looking at some of the issues around that. So I guess the 2 areas of interest for us as non-technologists are firstly the money. So if you are going to go into something like this, somebody's got to pay for it, and often our members are involved in that decision. So how do we prepare them to have a meaningful point of view on that? Secondly, if you're the CFO in a company and you do something in the space and it goes wrong, there's a risk and governance thing that again comes back to their table. So any advice from all of the distinguished technologists in this room on how we continue the education process, what we need to be doing as a professional member body for these people, and how we can engage better with the technology community. We're doing it, but we'd like to do more of it. Would be most welcome.
Would anyone like to come in on that before I open it back out?
What I can say actually is, having been in technology for 30 years, and once you get near the board, they just chuck you out because they don't understand what you're saying. But I have realised and experienced in this domain where now all of a sudden the doors are really open, and they seem to have started to educate themselves sufficiently to realise this is spectacularly affecting their area of business. So before Christmas, we were fortunate enough to be asked in to speak to a CFO of a major institution, and then we got there and it was full of all the board, the CEO, the CFO, they were all in there, and I didn't pull any punches. I spent 2 hours showing them cryptography, showing them transactions on Bitcoin, doing transactions, and I have to say they got it. You know, after 2 hours, they went away buying hardware wallets and buying Bitcoin. So I think in the past, they were reluctant to get involved, but they are quite familiar with the concept of transactions and money, etc. So really it's only the cryptography and maybe a bit about consensus that they need to know.
I think I'd have given in after 2 hours of that.
So I'll just make 2 points on that. Firstly, it's really difficult because there is so much hype. So my first piece of advice would be, if the value proposition to your business does not pass through your normal business process and business case mechanism, then send the person explaining it to you a way to do it again. So it should be able to grow your revenues, reduce your costs, and all of the normal things, help you provide new services to citizens, to customers, and those processes for buying technology are well understood. It never ceases to amaze me how, when I'm talking about this to a lot of people, I'm talking about something completely alien. So it's technology, it's databases, it's networks, just buy it as you normally would. The thing they would probably need to do differently in purchasing it, I would encourage them to collaborate with their customers and their suppliers to buy as a consortium. Buying a blockchain on your own to do your own thing is not going to really deliver any value. So the innovation, the different part of the sales process would be engaging with their customers, suppliers and competitors to have a workshop, have a kick-off, understand the technology together, and then decide how you're going to invest as a team, because investing on your own won't bring the value, but it's a basic business case investment decision.
Gentleman at the back of the glasses, first of all. Yeah. Behind you, and then you, and then the side.
Thank you. Rob Learning from Digital Catapult. We're an Innovate UK funded agency looking to grow UK's digital economy. I'd like to address the gentleman's point next to me in actually speaking to the punch. It was on the idea of commissioning a blockchain. The question itself is almost the wrong question to be asking. It's how can a group of us get onto a common platform is the actual question you should be asking, not can I buy a blockchain.
Gentleman in front.
Yeah, Chris Francis, SAP. I think precisely that. My question is, we need to differentiate between joining such a collaboration and setting it up. The conversation we've had today has already covered off so many examples where one of the foundation aspects sits as a public sector-owned canonical register, passports, national insurance number, health record, birth certificate, but also land registry, company's house, marriage certificates, it might be a fishing license, whatever it might be. How those are so many areas where the public sector has the keystone to initiate. How do we get those that are varying in their capability to be digital and collaborate, shall we say, into it? The other one I'd just like to mention that we haven't mentioned at all today, so I'd just like to put it on record, is physical supply chains. A number of areas where physical supply chains are fraught with fraud and forgeries. It would be worth having a quick just note that actually this potentially applies in those areas as well.
I'll just bring the gentleman at the side. Yeah, you.
Yeah, just very quickly. There's a chap at ICAW named David Lyford Smith who's actually developing educational content specifically for accountants. He and I presented together at the ICAW conference last year. So I would get, if you reach out to me, I'll put you in touch with him, because I think he may give you a head start on what you need to do.
Okay, and then the lady at the back. That's not part of this evidence session, I'm afraid. So what I will do is just let the gentlemen who are the speakers finalise what they want to say in about a minute each before we draw this to a conclusion, conscious of 5 minutes left.
Okay, I'll start. So that first point that you were making about
the government being the keystone of an information system. In a way, that's what I was, in our product, we're talking about a self-sovereign journey of the future, where the data and the process is owned by the citizen themselves, and you don't need a centralised system anymore. All you're doing from a government perspective is applying some kind of stamp to say that that representation of a status is true or not. And that's kind of what the blockchain is about to us. It's not something that's controlled by central organisations or consortiums. It's a public resource, and people are able to control their own data and information, and then service providers interact with it.
Thank you. Adam, John, your last thoughts?
Thank you. I just say thank you for having us, and thank you for the fantastic questions. Maybe just two last points to finish on. I think the exciting thing about this, and for government, for industry, for cross industry, is that these technologies will allow collaboration at a cross industry level. So maybe picking up at the point around sort of these single sources of truth. What you see if you look at these patterns, these single sources of truth, whether they're bills of lading in trade finance, or houses in a land registry, or swaps at an investment bank, they're very, very complex processes to come to an agreement on what that transaction actually is and execute that transaction. And then you update those sort of master data sources after. What these technologies allow you to do is have these different parties, some competitors, some peers across different industries working together. So I think that's sort of the dream, that's the promise, that's why we're all excited. And I would encourage government to continue this journey and move past the phase of sort of exploring research and into the phase of delivering, and picking up on John's point, but it has to be real. Don't just go do blockchain. Go solve problems that you have, that we collectively have, using some new technologies, and they might be blockchains or not blockchains.
Thank you. And John.
Yep. Thanks to everyone for the great questions. I sort of echo what Adam and Paul have said. I think in terms of fraud, the internet has enabled us all to manipulate data, and I just think blockchain technology will make it a lot harder. I agree with Adam. It's great to see the APPG happening, and I hope we carry on, and I hope that we can push through and maybe just get a little bit of the airtime back from Brexit. It's very, very challenging at the moment having conversations with government. I know that's recognised, but it's very challenging. I'm looking forward to the next phase when we can really focus on taking the country forward. Thanks.
As you can imagine, I'm as eager as you are to replace Brexit with blockchain. Just before we conclude, much of what we've talked about is about what government is doing, so I'll introduce Gosia from the Big Innovation Centre, who are fantastic secretariat, just to go through the pamphlet that you will have seen on the tables and chairs in front of you. Gosia.
Thank you, Damien. Thank you everyone for coming once again, and I just wanted to introduce you to Blockchain for Government Council. I'm sure most of you are aware we launched the call for submissions to the council at our spring party a couple of months ago, and you can see the brochure in front of you. So what it is a council that we will be setting up in collaboration with anyone who has the right expertise and experience and is willing to support the government in implementation of blockchain where the needs are. And I think this is the main focus. So we will be setting up subcommittees for different areas as they're listed on the brochure, and looking into identifying what the necessary, where the needs are within the different departments of government where blockchain could be utilized and implemented. We will focus on defining protocols with a focus on purpose, ethics, safety, trust, sustainability, and impact. And we are inviting anyone who would like to join in setting up working groups to be our experts or suppliers. And we're looking for those who can demonstrate excellence in operation, service, and product. We will be supporting the government in the procurement process with that. And lastly, I just wanted to mention that Blockchain Digital is a partner of ours with whom we're working on the digital platform to gather all of the use cases where anyone can collaboratively share and exchange in the spirit of open source, as we've discussed. Thank you.
Again, thank you, ladies and gentlemen, for coming on our first filmed evidence session. I think it's been a fantastic session as always. All that remains is for me to thank you, and if you would all just show your appreciation for our speakers tonight.